Most people start as wholesalers and then they go to rehabbing. I didn't even know what wholesaling meant when I started rehabbing. I went to that event and I said, wait a minute, you mean I can put a house in contract and sell this contract and make a spread? And that day was the best thing that ever happened to me. I left that event. I had 5 houses in contract to rehab. And instead we went and sold the contract and did like $250,000 in fees immediately after.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association, providing benefits and services to real estate investors and rental property owners for over 48 years. With your host, Brian Hamrick from Hamrick Investment Group.
This episode is sponsored by Green Property Management, now offering a $250 per unit project allowance to new clients in West Michigan. Find out more at livegreenlocal.com. And RCB Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 307. My guests today, Tiffany and Josh High, are self-made real estate entrepreneurs based in Columbus, Ohio. They've built a business acquiring and transforming residential real estate properties into high-performing assets or flips, and have closed hundreds of wholesale and rehab deals. They've also built an attractive rental portfolio and coach real estate entrepreneurs on their systems of success. Today, Josh and Tiffany are going to discuss how they've scaled their business by delegating tasks, lowering lead costs and overhead, all while increasing their bottom line profits. Tiffany and Josh, welcome to the show.
Thanks for having us. I'm excited to be on.
Yes, thank you so much.
Well, it's a pleasure having both of you. And why don't you tell us a little bit about yourselves, how you guys started investing in real estate and building these systems?
So we're based out of Columbus, Ohio. We have actively anywhere from like 40 to 45 deals going on at a time. That can vary with wholesaling, flips, rentals, just depends on the queue of deals at any given time. And we also have an education side to what we do, but we probably started, it's been almost 5 years now. I actually was in the corporate career in the building materials and the oil trading space. And I actually loved my corporate career. I really didn't have anything negative about it. There wasn't like anything that was really pushing me out from, not liking my 9 to 5. But I traveled all over the country at the time. My last role that I had in corporate space, I oversaw 16 asphalt plants for a roofing company that was global. And long story short, my younger brother at the time was only 17 and he got diagnosed with cancer, and he was put into Nationwide Children's Hospital for over a year. And during that time period, when I was traveling Monday through Saturday, most weeks, I would go drive 2 hours on a Sunday to see him for a few hours and have to come back. So I'd be flying back out to another city. And during that time period, one thing that I recognized was that my mom and dad had never left his side for over 300 days. So they never left the hospital, and they still had almost 4 or 5 companies running smoothly. And that really just opened my eyes to the type of mother that I wanted to become someday. And I just literally on Good Friday of May 2017, I just woke up one day and was like, I just can't do this. I can't, knowing that I want to be a mom in the next 5 years at the time. I called my boss in on Good Friday and decided to leave. And I didn't even know I was doing real estate at that point. I just knew that God was talking to me and that I knew that I had to cut this off in order to do something next in my life. About a week later, I was actually a private lender for some flipper in town during my corporate career. And I happened to just go tour one of his rehabs, and I walked it, understood, how he took it from a distressed asset, renovated it, and he was making about $80,000 on it. And it was no disrespect to my cousin, but I was like, man, if you can do this, I can do this too. And that's just really how everything got started from there.
I'll actually never forget the phone call I got from Tiff on Good Friday. She called me and I just quit my job. And I said, wait a second, you did what now?
And we just got engaged.
You didn't want to talk to me about this? You just went ahead and quit your job? Like, come on now, what's going on? And then she broke it down to me. So one thing she didn't explain was while she had her W-2 job, she leveraged that, which allowed her to build a small rental portfolio. But it was cash flowing enough to a point where she was actually going to bring home more net than what I was making as a civil engineer out of school. And I was like, wait a second, hold on. So when she broke all that down, at that point in time, I realized this real estate thing was the real deal. And that's what got me into it. And then from my construction background, when we started flipping houses, I obviously saw my piece right away where I could help manage the crews, manage the construction side of things. And that's really how we got started.
That is a great story of how you both got started. And Tiffany, what really strikes me is that it wasn't the real estate that attracted you to real estate. It was the ability to create income or passive income while you were busy with life, busy with your family, busy with very important family challenges that you were having at the time. So let's kind of take it from two tracks here, starting with the real estate track. Once you decided that that was the way you wanted to go, how hands-on did you get with the rehabs and the flipping and the acquisition of the properties?
I asked my cousin at the time he was the flipper that I was private lending for, how he got started. And he guided me to one of the education programs he was in to learn how to do flipping. So I called them. I ended up spending a lot of money, jumped into the program. And honestly, for the first 6 months, I failed miserably. I blew thousands of dollars and didn't perform, mainly because, and I know a lot of newer people can probably relate to this, that I would launch, some direct mail. I wouldn't get results immediately and I would freak out. And then I wouldn't do it again because I was scared that I was going to blow more money. And then my mindset, I would convince my mindset 3 weeks later, maybe to put some more out. And it was just very inconsistent. And at the same time, it wasn't that I wasn't getting leads. I actually, now looking back, got quite a few leads from my marketing, but I didn't understand the importance of the right sales process. And it's one thing to get leads. Honestly, I think the easiest part in the business, in my opinion, is to get leads. But to actually put them in contract at the right price and make a deal of it is really where the practice comes in. And so it took me about 6 months to realize, I really should start practicing the sales process and not just wing it when a seller calls me. So anyways, it was in December of, whatever it was, 2017. I said, if we don't get a deal in the next 2 weeks, I don't have an option. I need to go back to my corporate life. I was full of anxiety because my confidence was low and I just didn't expect this was going to happen. So Josh came to me at that time. He goes, you can do this. Let's give it 2 more weeks. And if we don't get another deal, then you can consider going back to getting a job. So we both studied super hard for 2 weeks. And he went out to a seller's house and took a seller who wanted $50,000 basically down to $25,000. And we got our first deal and made $18,000. From there, we just took off.
So the program that you were both involved with, it sounds like it was kind of a lead generation type system that you had invested in. Is that correct?
It was more of a rehabbing and raising private money program. But at the end of the day, any program out there is going to tell you to, do direct mail, PPC, Facebook, all these different things. And it's a matter of doing those consistently. A lot of people, when they start out fresh, they typically might think that, I'll spend $500 hoping to make, $100,000 or something like that. And I think that's really where people get caught up. They're not willing to invest money to make money. That wasn't really my problem. I was willing to spend the money and I had leads coming in. But again, I would get on the phone with the seller and I was somewhat winging it in the beginning. And now, we're far from that at this point. But that was really what was hurting me, is I wasn't following any type of sales process. And I really, anyone that's newer probably has a little bit of struggle understanding the numbers, what's going to work. Because until you get your first, 5 to 10 renovations done, is really when you start to lock down those numbers the right way.
So Josh, you were able to get to a sale or get to agreement where the seller, the first deal you guys did, the seller wanted $50,000 for his home. You got him down to $25,000. What was that conversation like?
So one thing that I did at that point in time, when Tiff came to me and said, we're spending thousands of dollars, we failed miserably for the last 6-7 months. And I said, hey, give us 2 more weeks. One thing I went to go do is I started to learn NLP. And NLP, for anyone that might be on the call that they don't know what it is, it's neuro-linguistics programming. And I had heard of it because of Tony Robbins. He talks about it a lot. And a lot of the seminars that he does and things like that, I was really big into listening to him talk on YouTube and stuff at the time. So I started to look into NLP and how you could use it in sales. And there were 3 tactics that I dove into learning. And it was adverb presuppositions, embedded commands, and tie downs. So I started to practice these. I would write down sentences that could come up in a sales conversation, specifically talking to prospective sellers. Then I would actually read those sentences out loud. And then when I got to the house and I was able to walk through the property, got a better feel for the situation that the seller was in. And to give you an idea of the situation, the seller lived up in Northern Ohio and they were driving down to Columbus every weekend, and they spent their whole weekend at the property doing a turnover. They just got rid of a tenant and they were fixing it up because they wanted to sell it. So I was able to go in there and explain to them that they wouldn't have to spend their own time driving down to Columbus on their weekends, the free time that they did have, to spend it working even more. And instead, we could go ahead and buy the property as is. And that way you don't have to put any of your cash into it in order to get it to a point where you're just going to get a wash anyways, because cash in, by the time you sell it, it doesn't really matter, So I was able to explain to them that, I asked them, how much is your time worth? How much is your time driving down here, spending your whole weekend driving back up, separated from your significant other? How much is that worth to you? And we were able to negotiate. My original offer was at $20,000, and they said, hey, listen, if you're willing to do 25, we'll go ahead and we'll go decide to work with you. So ultimately, me uncovering their situation and using some of those NLP tactics that I had learned is what really solidified us getting that opportunity.
And repeat the 3 NLP tactics that you used.
We used embedded commands, adverb presuppositions, and tie downs. So the exact sentence that I used 3 variations, but I know the one that really got the job done was I told them, obviously, when you drive home this evening, you're going to feel good knowing that you don't have to drive here, spend your time, spend your money on this property anymore, right? So in that, I'll break that down for you. Obviously is the adverb presupposition. It's the ultimate assumption. And then telling them that they will feel good or feel relieved is the embedded command. And then the tie down is right at the end of the sentence.
Very interesting. Okay. So both of you, Josh and Tiffany, really realized that you needed to put that emphasis on sales and how to speak to the seller, the buyer, whoever you were negotiating with. Josh, you employed NLP. Were you both kind of going through that process together, that learning the NLP, learning the sales techniques?
I would say Josh really took more control of that. And right after we did our first deal, we actually hired some mentors that we worked with one-on-one. And they got to know my personality and Josh's personality. That was the first thing we did when we started working with them. And they were like, Tiffany, you're responsible for dispositions, transactions, and raising money. Josh, you're responsible for construction and sales on the acquisition side. And so from that day forward, we completely segregated out our roles and responsibilities. And I'm no longer on the sales side. I have a more direct personality, which doesn't necessarily fit the personality type that should be working with necessarily a distressed seller. So I handle the back end systems, marketing, raising money for all of our deals. Now we delegate dispo out, but I used to handle dispo back when we started 5 years ago.
Tiffany, I would argue that raising money and talking with investors who you might be raising money from is also a sales technique.
The type of sales technique, working more of like a B2B type relationship, is a much different technique than working with maybe a distressed seller who's going through divorce or probate or the such. So my strong suit is more in raising money.
And Josh, it sounds like you're more focused on, once you do acquire the property, to do the rehab, the flip, whatever work needs to go into it. Talk about that process. Like, what systems did you put in place and what team did you bring aboard to make sure you had the crews to get out there to actually do the work?
People ask me a lot, how do we manage? So one thing today, we manage all of our projects virtually, which is a very unique thing, especially when it comes to rehabbing property. So when we first started out though, we would focus on subbing everything out. So I would go find the plumber. I would go find the electrician. I would go find each and every trade, but that was just creating more work for myself. We were able to find a GC that basically took over that project manager type of position. They are the ones that manages all those trades for us now. So one thing that's very important is just making sure that whoever you decide to work with, that the way that they get paid aligns with us as investors. So for example, when we first started out, the first GC that we used, they did a cost plus a fee. And that didn't necessarily work because they wanted to make 10% of whatever the cost of the construction was. The problem that I saw with that was it didn't really align with our goal because we wanted to keep the budget down. And instead, they were incentivized to keep the budget up, right? So they made 10% of whatever the total costs were. So they weren't really incentivized to go get more than 2 or 3 quotes for any trade to keep the budget down. So over time, we started to learn these types of things through just mistakes that we were making. So we were able to put into place a general contractor that has about 15 to 20 crews at any given time. So he does all of our rehabs. And then also we were able to bring in an operations coordinator who's also able to manage him and any other vendors that we might have that go into the process. So we've really dialed in our processes as far as, when we're in our due diligence phase, making sure that everyone who needs to walk it, one thing that we've done to kind of talk through that process now and what it looks like is the moment we go in contract, immediately we're scheduling an inspection, and that's going to be our GC and a home inspector that walks the property. So we want to make sure that a home inspector walks the property to point out anything that would be brought up in the inspection when we go to sell it to your retail buyer. So we can address for any of those things that might be coming up. So that way, the moment that we start the project, we are ordering all long lead items. Our GC is already on site starting demo. And now we're already projecting to have this thing done in the next 4 to 5 weeks. We're typically out of a property within 4 to 5 weeks. So that way, the moment that 4th or 5th week hits, our vendors are already lined up to get everything cleaned, staged, photoed, and listed right away. So we've really streamlined all of that. And I think the biggest thing I'll say is at the front end of the project, the more preparation that you have planning for your rehab, the more success you're going to have.
Anyone who listens to this show knows that Green Property Management manages my entire West Michigan residential portfolio. They manage single families all the way up to large apartment complexes. Marty and his team are running a new special that I think is absolutely nuts. And I tried to tell him so, but he wouldn't listen to me. They want to offer new clients a $250 per unit project allowance to have their in-house licensed crew tackle any project, big or small, for new clients. I can tell you from personal experience that their unique management style will save you money, eliminate headaches, and increase your net operating income. You add on top of that this limited time offer of $250 per unit for new clients, and it really becomes a no-brainer. So text GREEN250 to 21000 or visit them on the web at livegreenlocal.com and tell Marty I think he's gone off the deep end with this absolutely nuts $250 offer. If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com. That brings up the question then, what is your area? Where are you investing in and doing these rehabs?
We are primarily in Columbus, Ohio, where we reside as an office. We do about 50% rehabbing, 50% wholesaling, and then we have rentals. And then we also virtually wholesale in Kansas City. And when I say virtually wholesale, that also means wholesaling. We'll close a property, list it, et cetera. And then we do a little bit in a couple other markets, but Kansas City and Columbus are our primary markets.
Talk about the virtual wholesaling.
So Josh manages out the entire sales team. So our sales team has a team lead, and we have a group of sales folks underneath of them that reports up to Josh. And then I work with a virtual assistant company that I help build in Pakistan. And they run all of my tracking, marketing, phone flows, CRMs, all that. So it's pretty turnkey. I probably spend about an hour a week max, just making sure that everything's ticking. So in short, he's focusing on landing all of the properties with his sales team. A deal comes in, it goes to transaction coordination. I'm in a morning meeting with them every day, just being told what I need to raise money for and not raise money for. And then ultimately, I would say I oversee more of the bigger decisions from a transaction perspective because I'm handling the money. Let's talk about handling the money and raising the money. In a morning meeting, what will that conversation be like? Like, Tiffany, we need you to go get another 100,000, another million, and here's what it's for. I mean, talk about those types of conversations. So in our CRM, there's a view for me at all times saying how much money I need to raise by when and what properties are closing. So I normally have like 500,000 to $1 million for single family homes to raise at any given time. But yeah, I mean, I raise money every day of the week. So every conversation I have in my life, I'm raising money.
Do you have a stable of investors then that you go to and put out these opportunities, and they're just on your list, and you might put out, hey, here, we've got this opportunity. We need to raise $125,000 for this property.
I mean, at this point, 5 years into this, I have very close relationships with a lot of my biggest private lenders. So, my goal is to just make sure that their money is always working for them. So it's more of a timing thing for me to make sure that when one property closes, I can roll another property in pretty quickly. This year is actually our first big year where, we've gotten approved for unsecured credit line at prime rates. We have a lot cheaper money now being offered to us from small local banks. But at the end of the day, private money is definitely where it's at. It's more flexible, on demand. So we just have a big pool of private lenders that we've built a really strong relationship with over the last several years.
And it sounds like you're not actually raising money from investors who would get equity. These are more debt lenders.
Correct. I don't give equity to anyone.
So the two of you keep all the equity. Josh, what are those morning meetings like for you?
After we lock up a deal, we have our own due diligence phase. The moment that we get our inspections back, all of our quotes back from our contractors, I look at Tiff and I just go through the high numbers. Here's our ARV, here's our repairs, here's our purchase, and this is the profit that we're expected to make. Can you please raise $100,000 or $150,000 or whatever it is? So one thing we do in our morning meetings is we actually go through and we talk about every single transaction that is scheduled to close here coming up. So we'll run through what's our planned close. Do we have a lender in place? Yes or no? And then if we are making a decision on a property, we'll review all of that due diligence. And that's when I'll go to Tiff and say, hey, we need to have a lender in place by this date. So we're always going through a morning meeting on our operations side of things to talk about the properties that are coming up to close, how much we might need in lending and things of that nature, so that we're all on the same page and we're staying on top of those items.
It seems like you have these incredible systems for every step of the process. What challenges do you still find in your day-to-day business?
I would say right now, our biggest challenge is we're growing pretty rapidly. So we're at a phase now where we're putting middle leadership in place. And just so that we don't have a big organization of people reporting up to us. So we have a team lead in sales, a head of operations, and really we're just trying to groom people into being leaders. So right now our big focus is just putting leadership in place on the education side as well. But yeah, I mean, I wouldn't say it's a challenge, it's more of an opportunity. But while you're still managing out everyone and then training in the transition of putting middle management in place is a lot of work. So I will say we've been working some pretty long days, but it'll be worth it.
What percentage of your team is there in Ohio with you or Kansas City or wherever you might be versus virtually in Pakistan, I think is where you said your VAs are?
So our sales staff is in Columbus, Ohio. We have one thing that we do a little bit differently than other companies is our dispositions people are sitting in the cities in which we're dispoing. So we have an agent in Kansas City that dispose our deals and an agent in Columbus, Ohio, who is not employed by us that dispose out our deals. And then all of my back end software systems and all that is managed by virtual assistants overseas.
What's your deal flow? How many deals are you doing at any given time?
We normally have anywhere from 38 to 45 going live at all times.
So that's a pretty massive deal flow then.
Yep, it needs to grow some more.
Does it? I mean, do you find that as you grow your team and expand your systems that you have to expand the deals?
We're in a pretty good spot right now. So we're not really in a spot where we necessarily need to grow, but if we do, we definitely need that leadership in place. So our focus right now isn't necessarily increasing the deal flow as much as we get stabilized managers, and then we'll go back to growth. Being in corporate space, I was a corporate leader for a while, and I saw both cases where sometimes you would grow so fast that you forget to put the right people in place and it's just chaos. And then there were times where we would strategically plan growth. We would understand that more is coming and that's the goal. So we would put the right people in place first and then grow so it's not chaos.
And as you look out at the future growth, do you see it staying consistent with the type of assets that you're acquiring now and the type of processes, or do you plan on changing your asset class or the scope of what you're doing?
Our goal is to hold a lot more rentals moving forward. So about 4 years ago, I sat with a local bank. One of my mentors said, hey, go see what the local banks want out of you before you go take off with a business model. Those local banks a few years ago said, hey, we want to see at least 2 to 3 years plus of a very high net income that I'm paying taxes on, and then I'll become very lendable at prime rates to mass grow after that. So I know a lot of people when they start, and it's not right or wrong either way, is you start buying tons of rentals to offset your taxes, which is great. But if you're not showing the bank a consistent high net revenue, then you won't be as lendable if you want to start buying millions of dollars of real estate. So for the first 3 years, all I did was focus on what I knew the banks wanted to see from me in 3 years. And I slowly grew rentals and I focused on our net income. Now it's going to change. So now that we've proven ourselves to banks and the industry and all that, now we are going to start focusing on mass buying rentals and offsetting taxes because we're much more lendable now because we've shown an ability to run a very consistently performing company for 4 years.
And did you find that the advice that the bank gave you 3 years ago still held true 3 years later, or did their parameters change?
No, it still held true.
Josh, maybe I'm wrong about this, but I'm going to guess that you kind of handle the rental side as well?
So no, that's more of Tiff's strength. All of the active stuff, the wholesaling, the rehabbing, that's all me. All of the rental stuff, that's been Tiff.
We just put a property manager in place. We were managing them in-house, but recently we decided to test out a property manager. Who knows if it'll go good or bad, but we just pulled the trigger last week. So we're going to fit that into our process of, rehabbing it and handing them the keys and letting them take it from there. The beauty is our property manager is only working with us and one other major rehabber in town. So it's not like really your traditional property manager, if that makes sense. So he doesn't have tons of clients. We're big enough between the both of us to feed him. So I don't know. I'll be able to tell you in a year from now if it worked out or not. So.
Is that property manager that you've put in place, are they handling the leasing, the tenant relationships?
Yep.
How many properties then do you have in your rental?
Right now, we only have close to 30, but we'll probably start, like last month, we bought a lot. We'll start probably buying like anywhere from 6 to 10 a month now.
That you're going to hold as rentals for your own portfolio?
Correct.
So have you reached the point then where you both could step away from the business and be gone for 6 months and still have it run just as seamlessly as if you were there?
I wouldn't say not yet, especially when the key there was the 6 month piece. But again, that's what one of our focuses right now is we want to focus on growing people to help build that mid-level management or leadership. And then from there, once we invest into those types of people and we get them up to that point, then I think we'll be able to take a trip like that, 6 months, leave the business and have everything run smoothly.
Yeah, I'd say, if we're ever or when we're ever at, the 20, 30, 50 million mark, then I'll try to be at that point. But until then, I'm going to continue to grow out leaders throughout my company. So I'm just a big believer that if like you're trying to walk away for 6 months and you're like 5 years only into getting starting, then you must not love what you really do. It's my personal opinion, because you can always keep growing it. So I'm a big believer. I see a lot of like gurus in the industry say, oh, you should be working on your business and not in your business. But if you're only like 3 to 5 years in, and you're trying to do that, there's probably still room for a ton of growth. Only your version of growth changes. You're not necessarily managing the front end. You're managing now leaders, growing leaders and people into your future. Where
do you start? I mean, I'm sure a lot of people listening to this right now are maybe rehabbing, maybe flipping, and they've got a partner, but they've a small crew that they rely on. Where do you start building out those teams and those systems? What's the first move that you make to go in that direction?
You always need a couple things. You always need to hire a mentor that's in the position of what you're trying to become. And so when I say that, you don't want to hire a mentor that's like, let's say you're only doing 1 or 2 deals a month that's, doing 50 million, because there's too big of a gap for this person doing 50 million to even still relate to where that person's at. So every time you get to the next step in your business, there's always a mentor that's, 3 to 5 steps ahead of you that you need to go get to. I've noticed that. I've hired both when it comes throughout the industry. I've hired one that was so far ahead of me that they couldn't even relate to where I was at anymore. And then I've hired a mentor that was probably a couple years ahead of me in where I'm going to be at. And that's worked out great. And then also one of the biggest things I wish I would have done when I started rehabbing in particular, it's not necessarily wholesaling, is I wish I would have found the deal and for my first 3 to 5 deals, taken it to one of the biggest rehabbers in town and partnered with them to avoid mistakes, right? So that they can help me understand, because my first couple of deals, I made a lot of mistakes, even though I was in an education program. So, rehabbing is a different level of risk than wholesaling. And I just recommend anyone out there in rehabbing, 2 things to consider. Don't do a gut on your first deal. And 2, take the deal to somebody and partner with them as long as they're willing to teach you along the way and split the profits with them.
That is great advice. And I think a lot of people feel like they want to hold all those profits to themselves, and they may not think that partnering is valuable. But I love what you're saying, which is, well, if you really want to learn the ropes, partner with someone who's done it and knows what they're doing.
Yeah, I wish I would have done that, because I lost $106,000 on my first one.
Well, tell us about that. How did you lose $106,000?
Yeah, so we did everything that you're not supposed to do while renovating a property. So to break it down, first and foremost, when we were doing our due diligence, we let a realtor basically tell us what the ARV was instead of us coming up with our own ARV. They had speculated a little bit and we trusted it and just went with it. Not only that, but we also planned on a very thin margin. So making $20,000 on a flip is great for the right property, but when the property's worth $400,000, that $20,000 profit is only 5% of that, which is very, very, very slim. All it takes is just the property sitting on the market for a week, 2 weeks, or even a month. Now all of a sudden you have to do a price reduction. And if you're lucky enough to even get an offer at list price, now all of a sudden your margins are much thinner. Not to mention that there were a lot of unknowns because it was a full gut and we paid contractors in advance. So literally everything you're not supposed to do, we ended up doing. But the crazy thing was, through that experience, it really forced us to level up, right? I mean, it got to the point where we knew that this big loss was coming. We were dumping a bunch of cash into it. And ultimately what happened, one day we sat down and we called Tiff's parents, and I'll never forget this conversation. We're like, well, we don't know what we're going to do. We have this property that's been a massive headache and it's drained us financially, and we might have to sell our house and move in with you guys. For parents, being entrepreneurs, they gave us some pretty sound advice. At the time we thought they were crazy, but looking back now, we understood what they were saying. They said, hey, listen, I think that you guys have a really good thing going right now. Don't give up. Keep pushing through. I know you guys are on the brink of breaking through, and you guys are going to outlive this. And so what that did is, again, it forced us to level up. The next year, so we did about 40 rehabs in our first year after we did our first deal in 2018. And then we did 165 wholesale transactions following that property.
The next year.
The next year.
We've just done hundreds ever since. But that first property, when you're about to take a loss, like sometimes those challenges, God puts them in our life for a reason, because we had no choice but to win moving forward. And if we didn't win, well, who knows what would have happened, but it wasn't an option at the time. So, I didn't even know what most people start as wholesalers and then they go to rehabbing. I didn't even know what wholesaling meant when I started rehabbing. And I called a friend in the market and said, man, I'm about to lose all this money on this deal. What do I do next? And he's like, he put me in touch with a guy who ran a wholesaling event. I went to that event and I learned what a wholesale was. And I'm more of a systems processes marketing person. So I walked away from that event and said, wait a minute, you mean I can put a house in contract and sell this contract and make a spread? And that day was the best thing that ever happened to me. I left that event. I had 5 houses in contract to rehab. And instead we went and sold the contract and did like $250,000 in fees immediately after. And it got us out of the issue we were in. And then from there, at the end of the day, wholesaling is more of a marketing and sales company than a real estate company, in my personal opinion. So if you can get really good at marketing and sales, you'll know how to run a virtual wholesaling company.
You basically looked at the properties that you had under contract in a completely different light, rather than, are we going to go through and raise the money and borrow the money so that we can rehab them? We're just going to wholesale them to somebody else, let them do it. And that generated $250,000 immediately. Tiffany, talk about the VAs that you have in Pakistan. First of all, why Pakistan? And how were you able to train those VAs to do what you needed them to do?
Pakistan, the country itself, had really nothing to do with it. I just happened to be referred to a guy there to do work with me. And ultimately, I built a really good relationship with him and built out my own processes. And then I went to him, and really how education came about a couple of years ago was people were seeing our success and how many deals we were doing and asking how it was working. And it just stemmed from people asking us questions. And then I went to the guy that I was working with and said, hey, all these other people want to run their systems like me. Any chance you can build out a team and do all the same things for them that you do for me. And that's really how it started. And so now there's about 180 employees at it. And the beauty about the company is we have a tech side and an operational side. So I would say about 30% of the people are developers, coders. They can set up any system that you can imagine, whether it's even in our industry or outside of our industry. And then we also have the operation side where they can full turnkey run their back end, just like mine. And it's very rare to find a VA company where you can put in support tickets and, hypothetically say, hey, I want this to change in my CRM by tomorrow, and it's done. So normally they're two segregated things, but we've been able to put it all in one company. And the big thing that we decided to do differently when we built this out was a lot of VA companies, like you hire a VA, they're delegated to you, and then you're supposed to train them on all these processes. And you might have a VA, buying a list, skip tracing a list, calling a list, and doing all these different skill sets. But if you want to take it to another level, you got to think like the Fords, the Chryslers, all that, right? And so we don't operate that way. We put project managers in place that are way smarter than me and you in processes and systems. And then they delegate to the line. So there's basically an assembly line is what I like to call it. All your processes touch multiple VAs that have one individual skill set. And that's what's made it so much more scalable and manageable. So, there's quality control. There's 5 levels of leadership in the organization. So it's not like your typical VA where they just recruit a VA and give them to you, because I don't think that's a successful way to really operate, which is why you still see tons of real estate companies that go out, hire a VA company and they're still a disaster in the background because that VA can't do 30 different tasks great.
So if I hear you correctly, you've put together a massive VA team that's turnkey for anybody who might want to plug into it. Is that what I'm hearing?
You have to be a student of ours to get them, but they can do any tech development. So if you want them to build a Podio or need help connecting phone systems and all that, as long as you're in our virtual group training, they can do all the tech setup. But in order to get our operational VAs that I work hand in hand with the guy that's running it, you have to be in our program, because I'm spending a lot of time. Anytime I change something for my own company, it changes with them. And then they go out to all my students and say, hey, for example, we have a new spam control process with all the TraceAt going on with phone numbers. We implement a process. He goes out to my students and says, hey, she just implemented. Do you want this done for you guys or not? And they'll say yes or no. And if they say yes, they already know the process.
Talk about your training program. Go ahead and take a few moments to just tell us about the programs that you offer and how people can contact you.
The first thing we require is everyone is in our virtual group first, no matter if you're doing 2 deals a month or 20 deals a month. We don't do anything for newbies. But if you come into the virtual group, it's 4 weeks live with me through Zoom, and they're all recorded. But that first 2 weeks, we cover all my marketing systems, flows, anything technically in our back end. And then my tech developer who runs the company in Pakistan is also on those 2 weeks. Week 3, we go over our acquisitions process. Week 4, we go over dispo. That's to really clear up your foundation, because a lot of people run so fast in the industry that they don't pay attention to all the minute details that are built in the foundation of your company. Then we have a 2-day workshop in our office, and that's where we talk about building a team on top of it. So a lot of people in the industry, they stay 1 to 3 man shows because they don't focus on how to become leaders and manage out an organization. So if you want to be here 5, 20, 30 years from now, you need to learn how to build a team leads, management in place. So we show you how we onboard, train, and lead people on a daily basis. Primarily 80% of that's on sales, because without sales, nothing else matters. And then we have a 6-month program where we individually train your sales team if you want it. And then we also provide operational VAs that are full turnkeying your process on the back end with our company in Pakistan.
And how would people find out more about that and get in touch with you?
Yeah, we have a website. It's tiffanyandjoshhigh.com. Or, you guys can follow us on Instagram or Facebook and shoot us a DM, and someone on my team will put you in touch with it. But tiffanyandjoshhigh.com will at least take you to the front end virtual group page where we do our 4-week every month training.
Then as we wrap it up, just 2 quick questions for you. Best deal you guys have done and worst deal you guys have done?
Well, I think the worst deal is a no-brainer. The worst deal was the house that we bought, rehabbed, and lost $106,000 on. And we broke it. We went into detail, all the things that we did wrong earlier in the show. The best deal that we've done was...
I can probably pick a couple of those. One of them is actually probably coming up, getting ready to close. A wholesaler brought me the deal. I called a hedge fund. It took one call. Got an $80,000 spread just connecting that deal with a hedge fund and knowing their criteria. And unfortunately, so many people in the business aren't focusing and understanding that just because you won't buy the house to rehab doesn't mean someone else won't buy it at a crazy price. And so they don't spend as much time understanding the people in the market and what their criteria is. So took me literally the deal coming to my email, making one phone call, locking it up in contract and selling it for 80 grand in probably 20 minutes.
Wow. One phone call, you made 80 grand. I love that. And then any final advice for our listeners, those who want to get into doing what you're doing and basically just want to know how to get there?
I'll jump in and I'll say consistency. I know it's very cliche to say, but from the marketing side of things, consistently marketing, consistently generating the leads, and then also consistently focusing on perfecting our conversations with our prospective sellers. Just because you're creating leads doesn't mean you're going to close those opportunities. You need to also be able to focus on closing every single opportunity that crosses your desk.
I would say another thing I'm seeing, because I focus more on the front end of things, I'm seeing a lot of people going into these partnerships. So you might do a few deals, and then maybe you realize that you aren't good at one part of the business. And so typically they'll get a partner for what we like to call the 2 F's, out of fear or friendship. So they either fear that they don't know if they can learn construction, or they don't know if they can manage sales, or if there's a part of the business they fear they can't do. Or they're friends with the person and they bring them in just because they're friends. And both of those typically result in massive failure. And then what ends up happening is they give up later on, or it becomes a hot mess, and then they never get back into it. And so I just say, be very careful about if you're considering partnering with someone, on why you're partnering with someone and who you're partnering with.
Great advice. And Tiffany and Josh, I really appreciate you sharing your systems with us, talking about, whether it's your VAs in Pakistan or the team that you've built to do the sales and the leads and the rehabs. Very interesting. You guys are very impressive, and I'm glad we had this conversation. Thank you.
Yeah, thanks for having us on.
Thank you for having us, yes.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's higinvestor.com. And you can also ask questions and join us on Facebook by going to RPOA, Rental Property Owner and Real Estate Investor Podcast. This episode was sponsored by Green Property Management, now offering a $250 per unit project allowance to new clients in West Michigan. Find out more at livegreenlocal.com. And RCB Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.